Hi, everybody, and welcome to Making Sense with Dustin Lamontagne of Mackey Research Capital. I'm Bryn Griffiths. Dustin, how you doing today?
Good, Bryn. How's yourself?
Great. Well, let's talk about oil because it's a big topic here in the province of Alberta and all across Canada and some other locations as well. World demand is something that a lot of people are concerned about. Can we put that into perspective a little bit?
Yeah, I mean, the topic is without a doubt the number one issue on and the number one question I get from clients. Being in Alberta, it's the price of oil and oil demand and what's going on in the oil markets is always present. When I look at world demand numbers, it's something that always amazes me. The world right now uses about 100 million barrels a day of oil. To put that into perspective, there's a development off the east coast of Canada called White Rose, which was a joint venture, but I believe Husky is the lead company that developed that project. And when they discovered White Rose, it had a reserve of about 550 million barrels. So here's an oil platform that's going to pump for 30 years, add billions of dollars to the Newfoundland and Canadian economies, and that's basically 5 days of world supply. So when you look at world demand numbers, we really need to keep that in perspective, because I think there's a misnomer out there that we're at peak oil or that the world is using less of Alberta products. And it's really not the case. World oil demand increases approximately 1 to 1.5 million barrels a day per year, and it's not slated to drop anytime soon. In fact, in the next 20 years, the world oil demand is expected to climb to about 120 to 125 million barrels per day.
People ask why that is the case. World population has a huge role to play in that because there's more people on the planet. They need to heat their homes, and oil is probably, between oil and coal, it's right up there, 1-2. And so you have to continue to supply it to people. Now, getting it there is another problem. This is the one that we got to talk about. That is Canada, Alberta, and pipelines. And how do we get our oil product to Tidewater? We hear that all the time. What are you hearing?
Yeah, you hit the nail on the head there, Bryn, because when we look at population numbers, the world adds about 6 million people a month. So put that into perspective, three cities the size of Vancouver get added to the population every single month. It's staggering. 75 million people a year get added to the planet. So there's not a lack of customers for our products. And when we talk about pipelines in Alberta and Canada on an overall basis, we need to be able to get our product to markets. Because we're selling our product right now at a discount, and everybody knows this. The question I keep getting asked from clients is, how is this going to impact my portfolio? It's not an easy question to answer. But when I think about the short term, it has probably a negative impact at the moment. But as we get more guidance on these pipelines going out, I think that the price differentials will get a lot better for Canadian oil. And in turn, there'll be some good investing opportunities in this sector. The problem right now, Bryn, is that our products are a little bit boxed in from a transport perspective. And until that gets resolved, until we see some guidance on some new pipelines, the prices are probably going to suffer. But having said that, I think there's some positives that are happening, outside traditional crude. There's some big LNG, liquefied natural gas projects that are happening on the West Coast. There's one huge one, and there's a couple smaller ones that are being proposed. That's really going to help our Alberta and Canadian producers overall. in the near term. Longer term, of course, we're competing with U.S. shale, U.S. natural gas, so it's always going to be a competitive environment. But I'm fairly positive that investment capital will flow back to Canada at some point.
I was just going to ask whether or not you're bullish on Canadian stocks and everything in the oil industry or commodities in general in Canada, which has always been strong, but there seems to be a level of uncertainty.
I don't know if bullish is the word I would use, Bryn, at the present time, but there's never been a larger disconnect between the price of oil and the price of Canadian oil and gas stocks. They're at all-time lows. To put it in perspective, on a topic everyone can understand, real estate. So, a typical house in Edmonton, I think the average price is about $400,000. Right now, you're buying that house for about $100,000 if you were to equate that to the average oil and gas stock in Canada, trading at about 25% of what they're worth. And on the smaller companies, it's even a greater discrepancy between the value of the shares and the actual price of oil.
Okay, now we also have to take a look at the fact that we've had a major event happened, and that was the drones that attacked the refineries in Saudi Arabia. Now, that's got to be a huge factor in the way people are viewing anything, I would have to think, Dustin.
Most definitely. When we saw the price of oil starting to drop in 2014 because of the surplus in supply, there's always been a risk premium on oil, and that seems to have evaporated over the last 5 years. Well, I think we can safely say that's back on now.
Yes.
When you see oil spike 20% in one day, it leads the rest of the world to believe that maybe the supply is not as safe and secure as we thought. If you can have one event take 5 million barrels a day. Now, luckily, the Saudis seem to be able to get their supply back. At least that's what they're telling us.
I was just going to say that.
I don't know if I completely believe that. I think there's going to be some news come out that says, it's going to take us a little bit longer. But regardless, it seems that risk premium is entering back into the market. And that's going to be positive for oil prices. So I think that it's going to be a game changer for Alberta companies here. If we can combine that with maybe some Trans Mountain pipeline action and Keystone and Enbridge Line 3, I think things could be lining up. The stars might be in alignment for Alberta oil and in particular the sector. So I'm keeping my eye on it. We're not rushing in, with all guns blazing at the present moment, but it's, what a difference a week can make. It's
an interesting area. And do you think it's still going to be turbulent for the next year, or at least until the next federal election where we make it a little more clarity?
I think it's a sector of investing that's always going to be turbulent because you're not just contending with what happens in our own local market, but it's a global market. The oil and gas market can be impacted by what happens, of course, in the Middle East, but you have China demand, you have rising demand in India, you have turbulence in Venezuela, which is impacting the prices. There's different grades of crude, heavy versus light.
Yeah.
It's not as simple as, just the price of oil. There's a lot going on in world markets which are impacting the companies at home.
Well, that's it for today. We have more helpful hints coming your way next week. And just a reminder, the markets and financial numbers do change frequently. So what is said today by us could easily change by later today or even overnight. So for more information, contact Dustin at Mackey Research Capital. You can give him a shout at 780-905-7729. You can also email him at Lamontagne at MackeyResearch.com. That's DLAMONTAGNE. Correct?
Correct.
Absolutely. And you can also check out their website at MackeyResearch.com. Thanks for listening today. This is Making Sense. We're back next week. Have yourself a great day.